Hello and welcome everybody to today's live commodity market analysis with the Gold and Silver Club for the 20th of April 2017, presented by myself, Phil Carr. So during the course of today's session, we will go through live market analysis. We will go through our watch list of trading opportunities. We'll go through a forecast of where we expect gold, silver, oil to be heading next. We'll answer questions and of course we'll be providing live support as well during today's session. Before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies, and the agricultural markets, they are routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. For more information on the Gold and Silver Club and our expertise, please visit www.thegoldandsilverclub.com. Okay, so before we get into it, and before we start going through the charts, any questions as well? First of all, we'll just have a look at the year-to-date performance in 2017 so far. And currently, you'll be very aware that the metals have been among the strongest performers so far this year. Palladium is currently up 14%, silver is up over 13%, gold is up over 10%, and we've seen strong moves overall on the metals. Platinum also up over 7% in 2017. Not only that, the S&P 500 is also up over 4.8%. We've got the DAX up 4.7%, and some of the markets which have been a bit weaker over this year, in fact, the most weak markets of 2017 have included natural gas, which is down over 18%. Cocoa, which broke down again this week and took out the 8-year lows, is down over 15%. Sugar is down over 14%. Oil is broken down again this week, down over 8% for WTI crude oil, and also Brent crude oil down over 7% in 2017. So that just gives you an idea of where the trends are at the moment. Most of the time, we want to be on the right side of the trend unless we're trading much shorter on the right side of these major trends that have been going on throughout 2017, particularly the strongest performing markets and the weakest performing markets. We pay a lot of attention to that. Now, moving over to the charts, there's quite a lot I want to cover a session. I think first of all, what we can do here is start off with gold. I'm going to go for a slightly contrarian view at the moment in terms of what I see happening potentially here on gold, although we've got certainly geopolitical conditions in the background would favor on breaking news. Upside with gold, I just think at the moment we're a little bit overdone on this move. Of course, we've got the French elections at the weekend, so there is some risk to gold over the course of the weekend. But over today's session and tomorrow, what I'm looking at very closely, which is leading the move that I'm seeing in gold versus the US dollar right now, is gold versus the euro. So for any of you who trade gold against the US dollar, you must pay attention to gold versus the euro because this leads the price of gold priced in US dollars. Now, gold in euro and gold against the US dollar are both gapped on the open on Sunday. They hit their 5-month high, especially gold versus the US dollar came up, broke out to 1,295 US dollars per ounce, but it wasn't a sustained move. It didn't hit the 1,300 level that was expected by a lot of traders. We saw 1,295 get hit. We saw a filling of the gap from the open, from the Sunday open through to Monday. The gap got filled, and since then we have been correcting on gold versus the US dollar and gold the euro. So the chart I have in front of me at the moment is gold euro, and it's broken through some key levels. So particularly over the last 24 hours, it's broken through a monthly pivot. It's got a V-shaped reversal pattern, which is breaking down at the moment. It's already broken below yesterday's low, and you can see here we've had 3 consecutive or breaks below the previous day's low, closes below the previous low, and we're continuing to break down even during the US session today. And there's a lot of clean air ultimately for gold euro to break down further, because it has now taken out previous levels of resistance here, and you can see which normally would react to some kind of support. It's breaking down at the moment, and I would suggest often gold euro is leading gold US dollars by a day or two, about 24 to 48 hours. This is the case to the upside, but also to the downside. If you were looking at gold due to the recent correction that we had going back to the end of February, where we put in the highs on gold against the US dollar, After that we then saw gold euro giving the indication that this could be the top of the market. It started to break down first couple of days. It broke down first, then gold versus US dollar followed suit as well. So I'm looking at this closely at the moment. At the moment, gold, US dollars looks weak right now. It has some underlying support around the 1275 zone, but if we take out that level, you can see we've got underlying support there. This has been a major zone previously of resistance, but if we were to get a move and a break back below 1275 and break below that, I see just clean air here for a drop on gold. Ultimately, I'm also interested in buying pullbacks on gold, so certainly coming back to areas of value between 1260 down to 1240. If we were to get a pullback towards these zones, I would be interested in certainly picking up another position here. But I do believe short term, gold is vulnerable to a correction here, particularly if it takes out the weekly lows. And also, if we go over to the weekly chart, you can see this quite clearly. The weekly chart, although we gapped on the open, we spiked to the highs here, breaking out to 1,295 US dollars per ounce. If it closes this week below that major trend channel, this is the weekly chart going back to the highs here from Brexit. If it can't close above this level, again, it's vulnerable to a corrective move lower. And also, seasonality wise, you're at a time of year where gold typically puts in a top, so than a lot of other markets. It tracks its seasonality incredibly well. I mean, we've been monitoring this for a while now. The fact that we would likely put in a top around this week due to it being a period where normally gold does put in a top, unless obviously geopolitical tension heats up again. That is the wild card here. But right now, I would suggest gold overbought short term. It's chopping around a little bit. It's finding support around the 1275 zone. If we take that level out, if it gets breached to the downside today, again, I'm tracking gold euro here as well, because if gold euro really picks up momentum to the downside, that will likely see an acceleration to the downside, and gold versus the US dollar would also very likely give way as well. So I'm watching that very carefully right now. You can see a little bit of an inverse hammer on the daily chart at the moment. If we break below the low, break below support, I don't see much support then for gold until 1260. So it could be quite a nice clean slice lower, breakdown in price, and then we would likely get supported around this underlying level here, around the 1260 to 1240 zone. But we'll see. We still need to see a little bit more price action over the US session today, see whether we do break support. But ultimately, gold looking at a bit of a contrarian view at the moment and looking for a potential short-term move lower on gold. Now, moving over to, we'll move over, in fact, to silver, and then we'll go over also to, so silver at the moment is looking a little bit ropey here for silver as well. It's pulling back. It hasn't really been convincing, this breakout above the highs here going back to November. So we didn't quite close at above the 1850 zone, although it managed to breach up to that zone. It had a spike high, but hasn't really managed to follow through. Again, at the beginning of the week, gapped on the open, filled the gap, and it's not that encouraging for the bulls at the moment that it's not managed to hold above that level. And we're also seeing some corrective action on silver. I do note that a lot of these corrective moves so far in silver have been bid back up, but again, if you take out of the equation the current geopolitical conditions, this time of year, as we transition from April through to May, is usually not a strong time for the metals. But of course, that depends on the fundamental backdrops and what happens as well in the coming days geopolitically and with the French elections at the weekend. But right now, throughout the US session, as we go into this afternoon, it is vulnerable to another corrective move lower. I could see silver potentially, if it's already broken below yesterday, there you go, look, starting to get a bit of a breakdown. In fact, let's have a look. If silver's just taken out that low, let's just have a look at the pricing here. What's gold doing? 1277. But there you go. So silver looking vulnerable here right now. Let's just quickly flip that back. Gold euro coming down as well. So you can see that it's looking vulnerable at the moment. Overall, there's this correlation, of course, between gold and silver. Both of these markets tend to move in tandem, although any given point in time, if you do trade gold and silver, you want to be watching closely the gold to silver ratio. Now, at the moment, it favors gold over silver. So silver is slightly weaker than gold right now on the gold to silver ratio. So essentially, if you're buying one of the two, you want to be buying gold versus silver right now. And if you're looking to sell one of the two, well, in fact, I would suggest gold euro is the weaker of these markets right now, which would be the best one to sell. But I do expect that to follow through potentially to gold as well. So silver right now, again, I would look for a pullback. I wouldn't necessarily be a buyer at this level right now. It's continuing to pull back. It's testing around the 21-day moving average, just breaking through that. Wouldn't be surprised to see a retest of the 50 MA. There you go. It's starting to pick up a bit momentum to the downside at the moment. So certainly some corrective action. And we'll move over to the weekly chart for silver. Yeah, it's not looking that great for silver on a weekly chart. I mean, it is overbought at the moment, so wouldn't be a surprise here to get a bit of corrective price action lower. Now, it's early into the US session. We've still got a lot to go throughout today, so this price structure could change. But at the moment, certainly, it does look a little bit weak here as well. So just have that on your radar. We'll move it over. Also, we'll take a look at platinum, see how that's doing at the moment. Platinum has really struggled here to close above the 50-day moving average. It's had several tests of that level. You can see here at the moment where it's not really favored as well, not done as well as gold or silver throughout 2017. I mean, we've seen gold break out to 5-week highs last week, but we haven't seen the same sort of price action here on platinum. It's just consolidated and been choppy, quite choppy, moving sideways, ricocheting really between the 930 up to approximately the 990 zone. Hasn't really broken out of this range. So you can see here we just put on the consolidation. At the moment, we're continuing to just ricochet between support, resistance, support, resistance. So we're just moving between those channels at the moment. Once we get a definitive break, either above resistance, close above it, or break below support and close below that, that would likely give us more direction here on platinum. But at the moment, it's quite range bound, this market. So platinum, not really too much going on other than continuing to move range bound. I see better opportunities on gold and silver at the moment. But once it does finally break out this range, it is likely to give rise to a reasonable move. Okay, so with that, we'll also move it over to, I had a few questions this week, certainly about the S&P 500. So I'll just bring that over because it's looking quite interesting right now. We've definitely got a pennant formation on the daily. There's a battle between the bulls and the bears. Essentially, for the buyers or the bulls of this market, they're finding support where they need to at the moment. So we are getting supported at the lower end of the trend channel. You can see here very clearly where we're getting high lows at the moment, but we've also been getting high highs, spike highs. However, into the close, it's not managing right now to break and close above these major levels of resistance right now. So on the S&P 500, currently, today, certainly, it's had a strong day. It's having an up day so far. We'll have to see how the overall price structure looks into the close today. But we've managed to get above, so far, we're managing to break above the weekly pivot and starting to build up a little bit of support here. I'm very curious to see whether the S&P 500 can continue to follow through today, particularly if we see any weakness in the precious metals. So if we do get a breakout and a close above this overhead channel here, so you've got certainly a pennant formation in development here, I would be watching that carefully, because if we do see this market get going, break above resistance, and also the 50-day moving average for the S&P 500 is very important. So if it can break and close above that level, that is where we could see this market ramp up. But of course, if it just finds resistance again and continues to move just below the 50-day moving average, we might see it continue to consolidate. And if the S&P was to break below support here, close below underlying support and that swing low to the left here, taking out the weekly pivot, monthly pivot as well, then yes, likely we'd be ready here for the next leg lower on the S&P 500. So we'll keep an eye on that too. Now moving over to oil. Oil finally had a resolution this week, has been rolling over. We've had a lower high here, which was put in last week, towards the close last week as well. We developed a rejection candle. This week, we've seen a couple more inverse hammers here. It's been consolidating at quite an important level of support. So you've had a lot of underlying support around the 52.75 zone for US oil here. That finally did give way yesterday in quite a big way. You can see a very dramatic sell-off, taking it back to the next major level of support here around the $50.50 zone. So we're currently just finding a little bit of support at that level. It has come back down to the next major level of support. So I'm watching oil closely here to see if we'll get more follow through to the downside, taking out yesterday's low and potentially continue a move here back towards a 200-day moving average, towards the 49.50 zone, so $49.50 per barrel, or whether it will get supported at this zone, at the 50.75 zone. It's short-term overbought at the moment after yesterday's push lower, so it could just consolidate at this zone, form an inside candle into the daily chart, daily candle today on the daily time frame. So we're really waiting on a bit of a resolution here. It's had significant drop back from this overhead resistance channel, rolled over, V-shaped reversal pattern, has broken down, and today we'll be watching the price action quite closely. Also, if you have a look at the weekly chart, you've got a weekly rejection candle which formed as well, which has essentially been taken out to the downside, and oil here, it's moving quite well within its weekly channels too. I'll just take you out to another channel here. You can see very clearly underlying level of support, which is where it got supported on the recent breakout to the upside. We've come into overhead resistance and we've just pulled back, and we're right in the middle of this zone at the moment. So watching oil carefully too for the next trading opportunity. In terms of featured markets to have on your radar at the moment. So alongside the markets we're watching very closely, which of course includes gold today as well, watching this market very closely to see, especially if we can get a break below support here. It's looking a little bit weak at the moment, needs a little bit more movement to the downside to crack through support, potentially start to move lower back towards the 1260 zone. But we'll see how that moves over the course of the US session today. Sugar is a market to have on your watch list right now. Sugar's been consolidating for a while now. What is quite notable is the weekly chart coming back to the 16 level, very important zone for sugar, where it's found support going back to 2013. Also, this level has been a critical level of support and resistance in 2015, 2016. We're ricocheting between that level at the moment. Zone, buyers are getting in quite aggressively, but once we get towards 17, we're starting to see buyers just run out of steam, and we're seeing rotations back down again. Soon, I would expect a resolution of this consolidation. So if we get a pop to the upside, get back above the 21-day moving average, break above and close above this consolidation, I could see the potential for a move higher here, back to the next major levels of resistance. So I would keep sugar on your radar here for those of you who do trade soft commodities. Sugar is worth having on your radar if we were to be able to get a breakout, particularly on a weekly closing basis. If we get a breakout and close above the weekly highs here, that could lead to considerable move higher here. So we would be looking out for the potential for sugar to do that and for a breakout to the upside here. So have that as one of the markets to keep an eye on at the moment. Also, under the other featured markets, I would also be aware of the current price structure. For those of you who look to trade the soft commodities, cocoa has actually just broken through the 8-year lows here. So it's taken out major support, and I'll be interested to see how much further this momentum to the downside will continue to go. You can see here where we've taken out the 1900 level. It's currently trading just below the 1800 zone as well. So it's coming into the levels of support not seen since 2007. So I'm watching these levels quite closely here. What you tend to find on cocoa was it will break through major support. It will often manage to break through these levels prematurely, but then hustles into the weekly close. And again, I'm watching the weekly close because it's in such a significantly oversold condition at the moment. If cocoa was to get some sort of reversal at key support here, although the overall trend is down, and it has been quite a poor performance for cocoa this year, so you could either look to sell into rallies, but at the same time, if you catch these bounces correctly, they can be quite good from a risk to reward point of view once you're getting in after you've seen a capitulation on this market. We've seen several big bounces from major levels of support once cocoa gets into a very oversold condition. So that market is also worth having on your radar at the moment too. And that's a bit similar in terms of the price structure, these bear traps which develop to what has happened recently also with soybeans. So just to give you an example of what I mean by that, we can go over to the daily chart here. In fact, soybeans picking up the pace today. Okay, so if we have a look at soybeans, just to show you exactly what I mean here, often you can see a breakthrough key support, which this is very common on the grains, in fact, where you see a breakthrough key support, because often a market won't just stop at a particular round number. It will often just break through that level, trigger stop losses, and also get sellers involved in the trade, only to then completely return, retrace, and then close back above a major area of support, which I'm sure a lot of you are aware of. We would refer to that as a bear trap. When it gets broken, support gets broken, we close back above it, and then we see the potential for reversal higher. And certainly on soybeans here, it's done that over the last week and a half, broke support, closed back above it, closed back above major support, and it's building up a bit of a base here. In fact, from a risk to reward point of view, this is quite a nice move that we've seen here on soybeans over the last week or so. Let me just show you this in terms of the major levels that it's come back down to retest. And if this is going to be the short-term low here for soybeans, you can see here just in terms of the upside potential on this market for rotation higher is quite high after it had produced essentially a rejection candle and also capitulation from this major underlying level of support at the 940 zone here, and it's starting to really build up some momentum to the upside here. I would also actually, on that note, I know less of you probably do trade the agriculture markets, but it's worth having these on your radar for additional trade opportunities, particularly if we're getting to levels of value. Wheat at the moment, for example, is trading right at a major level of support. It's come back to retest a previous level of resistance, which is now support around the 420 zone. You can see it's bouncing just above the 200-day moving average, bit of support at that zone. If it holds at that level, and we're continuing to see support also for soybeans and corn at the moment, that could lead to another rotation back towards the upper end of this channel, back towards resistance at the 435 zone. So that's also worth just keeping on the radar at the moment as we continue throughout today's session as well. But again, going back to those of you who tend to trade gold, and gold in particular, gold and oil, but gold here especially, I'm watching the price structure on gold euro carefully. It is breaking down at the moment. If we see, I don't really see much in the way to stop gold euro from continuing this acceleration to the downside. There's a lot of clean air. It's a classic V-shaped reversal pattern, in my opinion. Breakout on the open, so we've gapped on the open, filled the gap, and you've got the potential for quite a heavy V-shape. This happens quite a lot on gold versus the euro, these big V-shaped reversal patterns. You can see quite a few of these previously. This was quite a significant one going back to March 2016. These V-shaped reversal patterns, once they get going, can be quite significant. They can often see bigger corrections. I don't really see much support in the short term here for gold euro until we get back down to around the 1180 zone. It's pulling back at the moment, and I would then look for some weakness also in gold versus the US dollar. And that is exactly what we're looking at the moment. Okay, fantastic. So with that, I hope you enjoyed today's analysis. If you like this on a more regular basis and you'd like to be able to join our live training rooms during the week as well and become a member of the Gold and Silver Club, very simply, to get access to our private live trading rooms during the week, all you need to do is go to www.jointhegoldensilverclub.com, complete the application form, and we will get in touch with you ASAP. So that is www.jointhegoldensilverclub.com. Again, as a member, you get access to the following. So you get exclusive weekly live trading room webinars, you get live trade setups ready to implement for instant results, you get notifications on every trade that we're taking via email and SMS, so you're not missing out on trades. You get details where to enter, exit, place a stop loss, trade management. You also get the weekly trading plan with a watch list of trade ideas for the week ahead, live trade support to help you through each trade, and institutional level trading research and commodity insights to give you the edge in the market. So again, if you'd like to make an application to join us at the Gold and Silver Club, all you need to do is go to www.jointhegoldensilverclub.com, complete the application form, and we will get in touch with you ASAP. Okay, so with that, guys, I wish you good trading. Have a fantastic into your week, and very much look forward to hear from those of you who will be making an application to join us at the Gold and Silver Club. Okay, so all the best, guys. Take care. Good trading. Have a profitable one, and we'll speak to you very soon. Thanks, everybody. Take care. Bye-bye.